So, good afternoon from Scotland and the rest of the UK, and good morning to the west of us, and welcome to this event from the Asia Scotland Institute. My name is Alex Humphreys, and I will moderate today's discussion. Also from the Asia Scotland Institute is Roddy Gow, Chairman and Founder, and Rich Minscombe, Head of Development. In this webinar, Giles Chance presents a starting point for discussion in his book, China and the Credit Crisis, published in 2010. The book and surrounding discussion within this webinar is centered around how China pivoted away from the US after the 2008 financial crisis and the lasting impacts of this decision. Giles's involvement in China began back in 1984 after meeting his future Chinese wife at the World Bank in Washington, DC. After getting married in London in 1988, they set up a Chinese advisory business with offices in London, Shanghai, and Beijing, advising MNEs on their entry to and development in China. In 2003, Giles co-founded a China-focused boutique investment bank called Evolution Securities China, with offices in Shanghai, Hong Kong, and London, raising capital for private Chinese companies in London and Hong Kong, and advising Western portfolio investors on China. The ideas in Giles's book are based on 20 years of close personal involvement in Chinese businesses. Subsequently, Giles spent 7 years as a visiting professor at Peking University and 9 years as an adjunct professor at the Tuck School of Business, Dartmouth College, USA. Andrew Milligan will also be joining Giles on the panel, sharing his valuable insight. Andrew is head of global strategy at Aberdeen Standard Investments, responsible for investment market advice and analysis from 2000 to 2020. He was also a member of the Global Investment Group, forming the House View. He has several decades of experience working in public and private sectors, with banking, stockbroking, and asset management for a range of global companies. In addition to supporting the Asia Scotland Institute, Andrew assists in a range of local charities and universities, as well as public speaking and writing on economic and financial affairs. Without further ado, I'll pass over to our chairman and founder, Roddy Gow.
Alex, thank you very much indeed for that very helpful introduction, and I'm enormously grateful to both of our distinguished panelists for being with us today. Andrew Milligan is a member of our board, and therefore his input is very useful to us. And Giles, I've got to know over the past months, and we're delighted that from France he is talking to us. For us at the Asia Scotland Institute, broadening and expanding understanding of all aspects of Asia is very important. And so this talk about Giles's book is very timely. So Giles, without further ado, may I start off by talking to you and ask you what it was that prompted you to write this book in the first place?
Well, good afternoon, Roddy, and thank you very much for inviting me onto Asia Scotland. I'd just like to say to start off with that I became familiar with Asia Scotland about 6 or 8 months ago, and I watched several of your presentations and seminars, and I found them extremely interesting and most informative, and I recommend them to everyone. So thank you very much for that. Now to answer your question. As we just heard, I became involved with China in the late 1980s and became very familiar with it through the 90s as I advised a number of big companies in Europe and particularly in UK, like, for example, Rolls-Royce and Vodafone and many others, on entering and doing business in China. And the first thing I learned about China was that it was on a roll and it was really going places. And then later in the decade, towards 97, 98, we had the Asian financial crisis when some of you may remember that Thailand, South Korea, and other Asian countries really completely collapsed. And China was very concerned about this, and Prime Minister Ronji in China decided to focus heavily on the export side of the Chinese economy in order to stimulate growth and employment. And in 1998, he sent Minister Wu Yi down to southeastern China to try and achieve this effect. And she was very successful, as she normally was. And exports started to grow very quickly. And this was stimulated enormously by China's agreement with America to join the World Trade Organization, which effected in November 99. And I remember being summoned to the BBC studio in London to discuss with one of the newsreaders what it meant. And I remember him asking me, Mr. Chance, what does China's joining the World Trade Organization mean? What difference is it going to make? And I said, well, I think you've got, 1/5 of the world's population joining the global economic system. So China joining the World Trade Organization is obviously going to make a huge difference. And I looked at there were two announcers, a lady and a man, and I looked at their faces when I said this. And they looked at me as if I'd been smoking something illegal or I was mad. And it became obvious to me at that moment that not only did people not really have any idea of what was going on in China, but also some of them may not like it very much. And that was my first sort of familiarization with the idea that actually nobody really knew what was happening in China and the impact of the huge export growth. I mean, Chinese exports grew from 1998 to 2005 by 4 times. And at the same time, we started to have much lower inflation or deflation, as Ben Bernanke described it, around the dot-com boom. And I started, because of my familiarity with China, I started to link the two events, the export growth in China and the much lower prices in Europe and America. And I thought that was probably a relationship between the two things. And that started me thinking. And then, of course, around 2003, when I was still thinking about all this, we started to get in New York the beginnings of the search for yield, which was initiated by very enterprising banks like Bear Stearns and others, creating higher yield, higher return investment vehicles using derivatives on real estate to provide higher yield and returns for investors. And this developed very quickly in a very loose liquidity environment. And by 2007-8 was roaring ahead. Leverage was very high, and of course it ended with a calamitous collapse, which bankrupted 2 American investment banks, Bear Stearns and Lehman, and would have bankrupted all of them actually if it hadn't been for the bailout organized the end of 2008, which involved Henry Paulson, the Treasury Secretary, and former head of Goldman Sachs, going down on his knees in front of Nancy Pelosi. So I think there was a relationship between China's entry into the global economic system and the much lower inflation and interest rates, which ended up with the credit crisis. And that's why my book is called China and the Credit Crisis. And I was thinking about this when I later in 2009 was teaching at Peking University in China. And I went to a supper party organized by the head of the dean of the business school, Zhang Weiying, a friend of mine. And his supervisor from Oxford University was at the party. His name is James Mirrlees. Some of you may have heard of him because he won the Nobel Prize for Economics in 1996. And I knew that. And I actually I sort of sidled up to him and found him to be a delightful and most unassuming person. And he started asking me what I was doing. And because I was thinking about this, I told him what I thought. He said, well, that's a really interesting idea. And I think that you're probably right. Why don't you write a book about it? So I did. And in the spring of 2009, I came back to France, found a little place in our cottage and started writing it. And the second part of the title, by the way, is called The Emergence of a New World Order. And when I proposed, and when Wiley has asked me, you can't just have, the publisher Wiley has said, you can't just have a simple title, you've got to have 2 bits to the title, the second part as well. And when I proposed The Emergence of a New World Order, they said, no, we can't have that, that's not what's going to happen. And I said, well, I think it might be what's happening, so I think that's what I want. So they did eventually put it on the book, and that's the second part of the title, and I think that's really what has happened. And I think that the problem today basically is that there are certain countries in the world, particularly the United States, which has a major problem accepting the fact that China is a big country, it's emerged, and it's as big, if not bigger, than America is. And that's a fact, and we can't escape it. And it's something we all have to learn to live with. And I believe strongly that we should try to accommodate China's rise and not stop it. So I think that's all I've got for the moment, Roddy.
Giles, well, thank you very much. Later on, we're going to ask ourselves the question of what the hell happens next. And I know that in your book, you talk about the the failure of the IMF to intervene post the World Trade Organization and China joining it. But these are topics which I know that your fellow panelist, Andrew Milligan, would like to address. So Andrew, over to you. And Giles, if you could mute yourself in the meanwhile, that would be great.
I will do that.
Andrew.
Well, thank you very much, Roddy, for inviting me to take part in this session, which I've been looking forward to very much. And thank you very much, Giles, for those interesting comments to begin our discussion today. I should say that Giles and I have had several conversations ahead of this. I've read not all of this book, but extracts. And I must say that in many respects, I agree with much of the analysis that he has made. Where I do not, I look forward to further discussion with him about some of the points of detail. And I know both of us are looking forward very much to the questions from the audience later on as well. China is, the big story of today. Giles entitled his book, China and the Credit Crisis, The Emergence of the New Order. And I think it's important to look at both of those issues, credit and the new order. Of course, China's impact on the rest of the world has been, is, and will be large and long-lasting. Giles just talked about a few of the issues, trade and deflation, the dash for yield, the credit crisis of 2008. I'm sure some of the conversation later could get around to BRI and China's interest in other countries across Africa, for example. So I suggest we use his insights as the basis to consider today and tomorrow to discuss firstly the current worrying state of debt across the whole world, and especially in China and the West, and then how the world economy and geopolitical systems might develop against the backdrop of certain common issues, problems, threats facing China and the West. Giles talked about just now about some of the US response to the growth of China, an economy that is probably now getting on towards the same size as America. By the West, I will use that as a shorthand, and I mean generally the United States, Europe, Australia, and such like countries. It's just some shorthand. Today's session is partly about credit, so let us not forget that China faces its own rather slow motion credit crisis, summed up, of course, by those much discussed property developers, Evergrande or Kaiser or Country Garden. Economists such as myself have long been concerned about China's debt mountain. How large it is very debatable, of course. Commonly, it's thought to be of the order of 300% of GDP, including corporate and all of government, of course. And as a consequence, and just only one, we're seeing much sluggishness in the property market in China, which by some estimates is 25, perhaps 30% of GDP. Again, always a bit difficult to know. Now, debt servicing is relatively easy for China. It's a closed economy, but of course it does have problems to service such debt when China faces other issues. And two I particularly think are worth talking about. The first is China's poor demographics. It's an aging population. The number of newborns in China fell for a fifth successive year to the lowest in modern Chinese history last year. So the working population of working age has peaked, and clearly that leads on to some of the discussions about productivity growth and the need for China to move up the tech curve. China also faces multiple climate and environmental constraints. I think it's rather important to remember that although COP26 was here in Scotland a few months ago, COP15, which is going to be the UN Conference on Biodiversity, takes place in China next month and is equally as important. And I think some of China's climatic environmental problems can be summed up by its dependency on coal and gas, for example. Over 70% of power generation is from those fossil fuels. So can the economy adjust quickly enough? Now, all of this, demographics, climate issues, debt, etc., will affect its future growth rate. It's interesting already that organizations such as the IMF are suggesting that China will probably only contribute about a fifth to total global growth in the next 5 years, when it was more like a quarter. So significantly important, but at the margin is just becoming slightly less important than it was. So there's a few comments about China's debt. Now, a few comments about the new order, so to speak. Now, I absolutely accept that China has created a rather better political and industrial system managing the needs of over 1 billion people, and must be given every credit for doing so. But of course, it's still a threat to Western elites. I'm thinking of elites in the worlds of defense, of politics, and not just mega business and high-tech firms, but many ordinary companies too. Anyone who reads the research from political analysts such as Eurasia or Chatham House will know about the widespread worries about defense threats, that hypersonic weapon which China launched a few months ago, unfair competition, human rights, supply chain risks, all greatly amplified by the pandemic, of course. And then the fears, the potential strategic damage by Chinese takeovers of key companies. So the threats are really quite widespread. Perceived threats, actual threats, perhaps we can debate. I think what's interesting is the extent and the depth of the Western response to this perceived threat. A few years ago, President Trump was focusing on trade and technology, Huawei and those trade barriers, of course. It's interesting that President Biden's tone towards President Xi is much more measured. But of course, he's been widening the array of measures in this battle, Cold War between America and China. We're seeing congressional rules on capital flows. We saw the US, UK, Australia submarines deal. And one review which particularly caught my eye was the US-China Economic and Security Review Commission report. What a large mouthful, which was issued to the Congress just a week or so ago. It recommended a host of new limits on business between the two countries, not just on goods and labor, but capital flows. And it actually has quite a good track record for predicting legislative and regulatory trends. It raised Huawei as an issue back in 2004. It highlighted risks within crucial supply chains, such as pharmaceuticals, back in 2010, and Jiangxing and the forced labor issue there a few years ago. I think what's another interesting aspect in this complex interplay of relations with China is it's currently losing friends. Australia, India, Lithuania would just be obvious examples, all exemplified by those tensions in the South China Sea. But China doesn't appear to be worried. Indeed, the Chinese Communist Party, I think, has learned in recent years to base its message and one aspect of its popularity on the idea of a Chinese national resurgence from all of those well-known problems back in the 19th century. Antagonism, wolf diplomacy, as it's sometimes called, is working internally. Just one small nugget that caught my eye, China blocked all 4 of Disney's Marvel movies from its cinemas last year, squeezing US film giants out of the world's fastest growing box office. So an issue, of course, for many governments is how to respond to these problems. It's interesting that China has imposed unofficial economic sanctions on Lithuania, an EU member, over the Taiwan issue, and Brussels is struggling to find an appropriate response. Hence, there's a growing debate about regional spheres of influence developing in Europe, in America, in Africa, in Asia, in turn affecting supply chains, globalization, future market opportunities. The tools are more like regulation and standards and alliances, which are the mark of the Biden administration. We can talk about geopolitics, but actually my comments today are not so much about geopolitics, but bringing us back to the credit crisis, which Giles talked about in his book. And my concern is the high level of Western debt, which we all face today. Again, commonly seen as 250 to 300% of GDP, if we look at corporate and government debt in most of the Western world, and how to finance it against all the backdrop of the damage which the pandemic has caused. China is now running a trade surplus of nearly 5% of GDP, partly because the Western economies have been weakened. So as we come out of this phase of the pandemic, the West is beginning to debate how to handle its own growing debt mountain. Now, inflation is possible, default is possible, but financial repression is also a very likely outcome following the Japanese example. I find it not just interesting, but rather worrying to note that the mainstream forecasts of economic growth in America and Europe from 2023 onwards are only of the order of 1 to 2% a year, which is much lower than before the pandemic. So let me end and return to the book, which Giles wrote a few years ago, with, I think, his very perceptive analysis of some important trends affecting not just the last few years since the credit crisis, but also the 2020s. China and the credit crisis, the emergence of the new order. Of course, the global debt crisis has worsened materially, and organizations such as the BIS and the IMF are really rather worried. Financial repression and central bank interference in markets is, I think, a very likely outcome for some years to come. Inflation is obviously another, but neither would be very welcome for any of us who've enjoyed the benefits of the economic expansion of the last 20 years, much of which we can give thanks to China for. China can certainly create a new world economic order, but the adjustment process could be rather messy. The naval race between Britain and Germany, pre-World War I, is a simplistic historic example. Technological innovation has become the main battleground of the global playing field. Competition for tech dominance will grow unprecedentedly fierce. Those were some comments from President Xi a few days ago. And the USA is very aware of its vulnerabilities, and I've pointed out some of the responses in the course of my remarks. Now, I'd like to end by saying I certainly hope that we have engagement between China, America, and the West, rather than breaking down into isolation into our respective spheres of influence. I think it would be much better for the whole world if we did. Perhaps the fact that COP26 and COP15, climate change and biodiversity, are the conferences almost surrounding this event today, will lead both the West and China to recognize that there are some very serious common problems facing mankind, and that all sides are going to have to change their attitude towards interaction and trade with each other if we are to have any hope of overcoming these serious issues. But I fear that, unfortunately, as Giles's book's title says, we do face some serious debt issues in China and the West, and we are at a complex turning point in the creation of a new world economic order, and whether or not it's going to end in a easy way or a difficult way will be something that he and I can discuss and we can address in our questions from the audience in a little while. Thank you very much.
Andrew, thank you very much indeed. I'm very grateful for your balanced comments and your observations on what Giles has written. I fear, though, that we can't guarantee that, like all good children's books, the story will end and they all lived happily ever after. We shall see. Giles, having heard Andrew, chance to have a little exchange with him before we go across to our audience.
Well, I'd just like to say that Andrew talked about a number of very interesting things and important things. When he was talking about China as a threat, I immediately remembered about 4 or 5 years ago, I went down to Eton College, Berkshire, to give a talk on China to the boys, about 50 or 60 boys in the foreign affairs group or whatever, some club or something. About 50 of them. And I showed them some slides that I'd been using for my class at Dartmouth College. And it summarized sort of positive aspects of China, like the share of sales of L'Oreal and Volkswagen in China and China's growth. And then it shows after that some slides of the South China Sea and China's build-up there and Taiwan. And then I asked the question, is China an opportunity or is it a threat? And I asked them to raise their hands if they thought it was an opportunity. And 49 out of 50 of the boys said it was an opportunity. And one of them said it was a threat. And the one who said it was a threat, I think, felt rather isolated. But, you know, it's interesting now that that was 4 or 5 years ago, before COVID. And I think COVID's made a big difference to the way we look at China. I mean, COVID, whatever the Chinese say, COVID did come out of China for whatever reason. And they could have done probably a much better job of not letting it come out of China. And now it's all with us, and it's a horrible thing, and it's really messed us all around and made our lives much more difficult. And I think that has affected people's perception of China very negatively. And I think whereas 5 years ago, most people regarded China in a positive and reasonably friendly light, you know, as an ancient civilization which was on its way back up, and that was all right. I think today people take a very different view, and I think it's a great pity. But I still think we have to try and look beyond that, because as Andrew said, I don't see how we can really move forward significantly with the huge problems we have in the world: climate change, debt, etc., low growth, poverty, unless we work with China rather than trying to decouple from and push China away.
Andrew, your reaction to that?
Oh, I would absolutely agree with that. A lot of the time in my comments just now, I was talking about perceived threats. Whether it's an actual threat or a perceived threat, the elites in many countries are perceiving it as a threat. But I think one further issue that Giles and I might just perhaps have a little exchange of views about is how this the capital flows between China and the rest of the world, America, will develop over the next year or two. And your thoughts, Giles, about where next for the renminbi and where next for the dollar? Because clearly, you know, one aspect of China overtaking America in terms of economic size and importance is how its currency also helps or hinders development in the region and the rest of the world. So any thoughts in particular about the renminbi and the dollar?
Well, I used to be, before I became a China person, I worked in the city. I had a very nice, well-paid job as a fixed income fund manager. So thinking about things like the RMB and the dollar is sort of, you know, natural to me in a way. And I would say that the RMB is a fundamentally strong currency because of the huge trade surplus which China operates. Whether that trade surplus is a good thing or a bad thing, it's arguable, but it does. The trade surplus for November 2021 was 75 billion. That's one month's worth. And so China continues to operate a huge trade surplus as a consequence of suppressed consumption within China and demand overseas for China's products. So I think that the dollar, because the dollar is a global currency and likely to remain so for the foreseeable future. Why? Because New York is the global capital market of the world. I mean, and also I think that people feel comfortable. I mean, America's not made itself look wonderful in the last few years, but nevertheless, it remains the most important capital market and dominant culture. So people feel comfortable with dollars. I don't think they would feel so comfortable really holding RMB or renminbi, partly because they would feel that, you know, it was being issued by a communist government. I don't think China is a communist country, by the way, a country which produces companies like Alibaba and Tencent and many other really successful private companies, I don't think can be communist, but it does have a government which calls itself communist. And I think that probably a lot of people would not feel happy holding their savings in a currency like that. So I think that's my thought on I think the RMB is being maintained at a parity of around 6 to 6.5 RMB against the dollar by the Chinese central bank. And they have to intervene to do that. And that creates surplus reserves, which have to be invested somewhere. And a lot of it goes into US treasuries. So I think that the financial links between China and the West, and particularly the US, are very, very strong, and they will continue to be so. Even although China has been quite successful in kind of walling off its own economy and keeping it walled off so that it can control it itself and won't allow foreigners to come in and destabilize it.
Well, I think that's an interest. I agree with your comments in general on the currency. I think one of the interesting points at present, of course, is that China is beginning to encourage capital flows from more overseas investors. If we can think about how Chinese bonds, Chinese equities are rising up the index and a lot of benchmark followers. And so I think this is an interesting trade-off for China in the 2020s. On the one hand, it encourages foreign capital in. On the other hand, by doing so, you make the balance of, and you make your domestic financial markets look more liquid. On the other hand, you actually open the door to that capital leaving as well, and therefore make the financial markets a little more vulnerable. So I will find it fascinating over the next few years to see how open the Chinese capital markets come towards foreign capital, whether the Chinese financial system remains relatively closed or whether it opens up considerably. And I think that will matter very much for the renminbi dollar relationship going forwards as well.
Yeah.
Right. Yeah. Alex, would you like to start to deal with some of the questions?
Sure.
Good.
Yeah, I'd like to encourage everyone in the chat to think of any questions as well instead of statements, because we've had a lot of statements and replies, but it'd be good to have some well thought out statements, questions as well. From Elizabeth Marshall, she was looking to answer a question on Germany has not backed the USA over Ukraine. Can we therefore presume Germany/EU will take a different view over China as the US does? Giles.
Sorry, could you repeat that question? I'm not sure I understood it.
So Elizabeth was stating the fact that Germany did not follow suit in the stance of the USA over the Ukraine. She was asking if we can therefore presume the Germany and the EU will take a different view over China as the US does.
Well, I think the German view on China is very different to the US. I mean, and so is France as well. The Brits have tended to side with the Americans over China a bit, although there's a big discussion going on inside Whitehall and London and other places, Edinburgh, about whether Britain should be completely anti-China or not. But I think the success of companies like particularly Volkswagen, which something like 40% of Volkswagen, 50% of Volkswagen's profits come from China, and many other German companies and French companies like L'Oréal, Hermès. I think that something 25% of Hermès's net profits come from China. So these France and Germany, I think, have a very proactive view towards China, and I think they're much more tolerant of Chinese behavior than the US is, and perhaps Britain is. So I think Europe, and I think France and Germany drive the EU. They're the ones that matter, really, those two countries. Nobody else really matters very much. So I would say that that Europe would have a very significantly different view from the US towards China.
If I can just interject with one small point, which is it'll be very interesting to see if the new German government with the green element actually takes a slightly different view. It's too soon to tell yet, of course, because the government only entered office a few weeks ago. But I know the Greens in Germany have got a very different stance on China to some of the more traditional CDU type, where the commercial links, as Giles explained, are much more significant. Yeah, just a small interjection, look ahead.
Perfect, thank you. From Scott Strain, will Chinese economic growth and innovation be stifled by the CCP's drive to bring its tech giants and tycoons under control to a heel? Andrew, do you want to go first?
Well, it's the 64 trillion renminbi question, that, of course. Giles is absolutely right to say that the authorities have allowed over the last 20, 30 years or so, some extremely high-tech companies to develop. But at the same time, they're beginning to push back against some of the entrepreneurial spirits that are being seen. They're putting a very large amount of money into high tech, biotechnology, AI, etc. But again, they're facing some restrictions, not just from America, but from Europe as well, about the transfer of technology, which has been worrying people. So I welcome Giles's thoughts on this, but I think it is noticeable how the Chinese trend rate of economic growth is just slowly decelerating every 5 years or so. If China manages to grow 4 to 5% a year in the next few years, that's going to be quite good for it. And it's partly debt, partly demographics, and partly just the entrepreneurial technological innovations are becoming a little more constrained, I think, by the current direction of the Communist Party. But Giles may well have some extra thoughts on that point.
Well, I think that the Chinese entrepreneurs are a hardy beast. And it's really remarkable when you look at the number of private companies that have sprung up in China since the mid-90s and late 90s. I was very active in working with a lot of these in the early 2000s with our company, Evolution China, which arranged listings in Hong Kong and on AIM in London for 10 or 20 or 30 of them. And I met a lot of these people. And, a lot of people don't know that China has a great many very successful and large private companies, by which I mean that the share capital is owned by people, not by the government, and is controlled by individuals. I mean, the first company we raised money for in 2003 was a company called Geely, which occupies 5 or 6% of the Chinese car market, which is the largest in the world. And it's a leader also in electrical cars. Li Shufu was the founder, doesn't speak a word of English, was keen. He started making cars in about 98, 99. He had a vision that the Chinese, wealthier Chinese would need to buy small cars as a first car or second car, and they prefer to buy Chinese. So he went from being a motorcycle manufacturer to being a car manufacturer. And when I first visited his factory in October 2003, I wasn't allowed inside. And I realized later that if I did, that he was rather frightened of showing me how his cars were made. I mean, with bits of rubber band and things like that. Nevertheless, we did manage to raise $50 million for him. And he later bought the London taxi company, which is called Manganese Bronze. He bought a Volvo in Sweden in 2009. And he owns 10%, or his company owns 10% of Daimler Mercedes-Benz in Germany. He's become a major figure in the auto industry. Just one example of extraordinary entrepreneurs that China has produced and continues to produce. So I think Andrew's view is a bit top-down, and he is a strategist, so he's allowed to have top-down views. But my own rather more bottom-up view would be that the Chinese entrepreneur is a pretty strong animal, and it takes an awful lot to stop him being an entrepreneur. So I'm quite confident, and I think China's human capital is their secret weapon. It's proved to be the case in the last 40 years. They have all sorts of problems, but I still believe in them, and I think they can overcome them because of the people and their determination, ingenuity, and so forth.
A top-down strategist will just remind you, Giles, that the stock market in China was one of the worst performing last year and has started this year on another downward phase. So those entrepreneurs might have good entrepreneurial spirits, but they're not making the profits to push the stock market higher.
Well, yes, all right. That's got a lot to do with. I mean, you're right, but I don't. Geely actually has been very successful, and I've been holding their shares for a time. I think that there are companies like Li Ning and others that have done quite well, actually, share price wise. So it's arguable, and clearly, I think also stock markets generally are going through a bad period at the moment because of higher US rates. So that's a very complicated discussion, which I don't think we should get into at this moment.
You talk about both of you human capital, people being so terribly important. Well, there's two aspects, isn't there? One is the aging population, which was mentioned. The other is the need to satisfy the growing middle class, because if she fails to do that, then there will be a problem. Is that an issue that needs to be factored into any risk assessment of China? Giles, you first.
Well, I think that the Chinese population is remarkably sort of homogeneous. And, as I think what everyone knows, China is completely different to the West. They don't have no Christian or Judaistic or Muslim tradition. Confucianism and Taoism are the two influences in China. They're completely different to anything we have in the West. And Confucianism is to some extent about discipline and family spirit. And also the Chinese are very nationalistic. So I would tend to think that those qualities are going to be very important in what comes next in China, and that the Chinese are quite prepared to put up with a measure of hardship and pulling in their belts if they think it's important and necessary. So we tend to equate consumers with the rather spoiled sort of Z generation that we see every day in the West. I'm not including my children in this, by the way, if they're watching. But we do tend to think of Western consumers as very indulged, and some people in China like that too. But I think by and large, the Chinese are a very disciplined group, and most of them still don't have very much. So I think they'll be able to weather the storm.
Andrew?
But Andrew, you think differently.
I think your question's a very, very sensible one indeed, Roddy. I think the Communist Party has done wonders in the last 10, 15 years about meeting the expectations of a rapidly growing middle class. And, it's several 100 million people now in China. The issue going forwards, of course, is can they continue to do so? And in two senses. Firstly, I think we're all well aware of some of the energy, the food, the supply concerns that have faced China in the course of the last year or so. And I think that's one reason why Belt and Road and developing supply chains across Latin America and Africa are just so important to the CCP. You've got to allow this steady stream of raw materials to come through. And the second, again, it's the 64 trillion renminbi question is, can China break through the middle income trap? Can it actually move out through the use of technology to become the equivalent of the Koreas of this world, or is it going to remain a middle income country, which it currently is in terms of GDP per capita, not in terms of GDP as a whole, of course. And that is a very, very uncertain issue indeed. Some people argue yes, some people argue no. But the implications of that, again, for middle class incomes in China, do they create sufficient high-powered, well-salaried jobs, or are people going to start finding that no, their children can't actually get as good a job as their parents did because of the middle income trap, as it's commonly called? So I think your points are extremely perceptive about Chinese middle class and the ability of the country to provide good jobs and the ability to provide a decent supply of all the necessities of life. It is periodically a problem for China, and that I think partly explains its policy towards the rest of the world.
Thanks, Andrew. And that's one of the reasons why we are in touch with and frequently ask both the embassy, the Chinese embassy in London, and the consulate in Edinburgh, to talk to us about the challenges they face so that we can better understand it, because it is, and some people have asked this, in all of our interests to engage with and understand what is going on in China, and where necessary, draw the line if we feel that is the case. Alex, back to you to bring some more questions
thank
forward.
you. Just bear with me, everyone. I'll try and get through as many as I can. So Gerald Ross, China is shortly about to start shrinking and will hit a demographic wall after the one-child policy, as did Japan. Later in the century, Africa will become the most populous part of the world. How should this affect our policy today? Andrew?
Well, I've partly referred to this already with my suggestion that the trend rate of growth in China will just continue to decelerate during the 2020s and the 2030s. It's commonly accepted that the population of working age actually began to roll over in China about 5-6 years ago or so. And the pension system in China is going to be increasingly problematical as we get into the 2030s, as more people retire or so. No one thinks, I'm certainly not of the view that the Chinese economy will collapse. It just becomes slower growing. I think the point about Africa is very significant indeed. If we look at any demographics into the 2030s, the African population, I think, broadly doubles or so by 2040. So it will become an extremely important market, competitor. I mean, the Nigerias, the South Africas, the Ethiopias, etc. And how Europe, how China, and how America are involved with Africa, I think, is going to be one of the great issues for us all to address. Again, is it a threat and an opportunity for many of us? So Africa, absolutely, from a demographic point of view, first, second, and third issue.
Thank you. As from Rick, I understand the next phase of China's growth will rely increasingly on rebalancing the economy away from fixed asset investment and export-led growth to domestic consumption. Do you see China making the institutional reforms necessary to increase domestic consumer spending's share of the economy? What should we be looking out for to get a sense of progress on this front?
Do you want to start, Giles? Or?
Yeah, I'll have a shot. Well, retail sales grew last year in China by between 4% and 5%, which is not a bad number. Of course, the Chinese would like it to be a larger number, but consumption is growing in China, but not as fast perhaps as the Chinese government would like, and not fast enough to sort of radically rebalance the economy away from what has been extremely high levels of spending on infrastructure. So I think it's going to be a long process. I think that's the point. I think we're looking at a sort of decade or multi-decade process of shifting from one source of growth to another. It's not going to happen in the next year or two, but I think it will happen, and it steadily will shift. I don't think China's finished spending money on infrastructure, but the bulk of, I think it's beginning to throttle down on it. And I noticed also that the Chinese last week announced that they were going to stop lending so much money to Africa because they were beginning to get worried about the levels of debt that were being incurred by certain African countries. But so that's my answer. I think that it's going to be a long tail thing, and it's not going to happen quickly. But I think it will happen because the Chinese middle class every year grows by some 20 to 50 million people, and that will continue. And as the population ages, I think you'll find that, as in Western countries, older people tend to spend more than younger people do. So that will help.
Can I just quickly jump in with one question for both of you? We all know that China is a very substantial holder of US Treasury bills. Is that leverage that they've got and could use to the disadvantage of the US, and how?
But it's leverage, but also not. Of course, they could sell, but if they sell, the price goes, and so does the quality of their asset. So it's rather like that mad nuclear weapon. One would never use it because it causes just as much pain to yourself. So I personally think this is a point that's often raised, but not actually a serious worry.
Okay, that was a question raised by Chris Smith, I see. Giles, do you agree with Andrew? Do you agree with Andrew?
Oh, me? Yes, I do agree with him. I don't think that, I mean, China, how much, Andrew, you probably know better than I do, is it about $1 trillion US?
I sent a little note back to Chris Smith. I think it was close to 2 trillion, I thought, prior to the crisis. Of course, since the crisis, American debt has surged and the Fed's holdings have surged as well. I mean, we're certainly talking of very sizable figures.
Yes. Now, I totally agree. I don't think it's a weapon at all, because it's like shooting yourself in the foot or the head even. The last thing, actually, in spite of all the rhetoric on both sides, the last thing China really wants is for America to go belly up and vice versa. So I don't think it's really, it looks like it could be a weapon, but I don't think it really is.
Okay. Alex, back to you.
Thank you. This is sort of amalgamated from a number of questions, but how much of a priority do you think human rights will be in driving the US-China relationship in the future, and for that, the West with Hong Kong as well? Giles? Okay, well,
I think it is a big issue at the moment. I mean, people get very exercised about Hong Kong and Xinjiang. And I think, to be honest, I mean, in my own view, it's perhaps slightly different to some people's. I think that many countries have committed human rights abuses. Guantanamo Bay I regard as a serious abuse of human rights. And what about, for example, the attack on Iraq, Syria, etc., etc. So, okay, I don't think China's behavior in Xinjiang is perfect by any stretch of the imagination, even though certain jihadist Turkic members of that region attacked railway stations and public places in China and killed people. I still think the Chinese have probably overreacted a bit or a lot. But I think we have to look at the human rights thing in a balanced way.
I think it's useful to look at it from the point of view of several different groups. Politicians clearly make use of human rights as and when they wish. China, Saudi Arabia, what's happening in the Yemen would be prime examples. So it's almost an extra point to add if you wish to criticize a country or not criticize it. I think what's interesting, though, is human rights not just becoming something in the media, but something that will start to affect how consumers behave. It is interesting, for example, that various companies are now beginning to say, we are making textiles in China, but it does not include cotton that is picked by forced labor amongst the Western provinces, for example. They're going out of their way to demonstrate that human rights are fitting in to their whole ESG agenda for the company. That yes, they do business in China, but they're trying to do their best to make sure that they are dealing with the better rather than the worst Chinese companies. So I think consumers are increasingly responding to some of these human rights signals by asking businesses, and some businesses are going out of their way to demonstrate that they are on top of some of these human rights concerns. And the simple example of cotton from the Uyghur area would just be one that I think we can all understand.
Perfect, thank you. A question from Tobias. What role does the Chiang Mai Initiative and China's regional bank swap lines play vis-a-vis the Fed? What does that say about the likelihood of a large-scale credit crisis within China?
I personally don't think that there will be a large-scale credit crisis in China, and I think from comments that Giles and I had before this session, neither does he. And the reason for that is that the authorities, in effect, control the banking system, control local government finances, and can move capital and bad debts around from one company to another, from one part of the financial system to another. There's a very slow motion widespread and serious debt problem facing China, and in effect, it is creating a larger amount of debt each year for a slower growing economy, which is not just happening in China, it's happening in many countries, of course. But I'd be very surprised if China suffers a credit crisis of the order of 2008 or such like in the next few years. It's got all the tools which it needs to prevent that happening. But the consequence of having so much debt is exactly what we're seeing in the property market currently. You can't build quite as many houses as you did a few years ago, and that ripples through into the GDP data, it ripples through into consumer expectations. House prices are falling currently in China for the first time in 5 years. Not seriously, and this isn't the start of a major crisis, but it's just a sign of the pressures that the Chinese system is under. Just as the UK is under pressures from its government debt problems, Japan is under pressures from its demographics, etc. These are all different aspects of the same issue facing the world, which is a serious debt mountain. Giles, would you agree with those comments?
Yes, I would. I think, I mean, the Chinese house prices, the Chinese government probably should have intervened in the house market earlier. And as it is, they've allowed Chinese house prices to rise to ridiculous levels. And since private ownership of houses was introduced in China in 1997, that asset class has become the best place for people with surplus cash, surplus money to invest it. And there are lots and lots of Chinese families who own 10, 15, 20 different properties spread throughout China and have made huge amounts of money. Of course, the same is true in America, UK, and European countries as well. So what's different? I just think it's gone too far in China, and the Chinese government should have stepped in a bit earlier. As it is, they felt, I think, last year that they had to do something. They said, it's interesting the way they dealt with the problem. Rather than actually trying to strong-arm banks or lenders, they actually just set some rules and said, look, your leverage can't be more than this, and your assets have to be a certain proportion of your total balance sheet, and then sat back to see what would happen. And they, I think, had a pretty good idea which companies, again, have serious problems, Evergrande being one, Country Garden another, and some others. And they will allow these companies to go bankrupt in a quiet sort of way, and their assets will be sold off, and they'll be quietly put to bed. And I think the Chinese government has had practice at doing this before. Back in the late 90s, they were faced with massive non-performing loans and set up 4 separate companies to manage these and took them off banking balance sheets. As Andrew said, I mean, the Chinese government control most of the economy via the state banking system, which has something like 70 to 75% of total banking assets in China belong to 4 or 5 or 6 large Chinese banks which are owned by the government. So the government basically can take money from one pocket and put it in another in a way which is difficult for countries like America or Germany or England to do. And that gives some assurance, I think, that there won't be a huge collapse. People often ask me, why has there not been a major financial crisis in China? And my answer is that there are frequent financial crises in China, several every year, but the Chinese authorities are very good at dealing with them. And the central bank are very expert at managing the process. And I think that we're seeing that with the management of the Evergrande and Country Garden problem.
Thanks, Giles. And Alex, I think as we sort of wind up and just deal with some closing comments from each side, I'd like to congratulate you on fielding the questions with the adroitness of the Australian, if not the English wicketkeeper. So thank you for that. Andrew, let's have we've got about 4 minutes, just a few comments to close us out. To you first and then to Giles.
I would absolutely agree that the relationship between China and America is going to be of significant importance for the global economy, the global geopolitical system, financial markets, and our future wealth over the next 10, 15 years or so. I think it's still very uncertain as to whether that relationship is going to become completely fractured, relatively positive engagement, or actually inexorably turns into a relatively positive relationship between the two sides. There is much to play for. There are many obvious examples of excellent trade links, cultural links, opportunities for both China and the West to learn and benefit from each other. But as I warned in my comments at the start, there are perceived or actual threats to many of the elites on both sides. And I fear that it may take a turn for the worse rather than a turn for the better because of those perceived threats.
Thanks. Giles, 3 minutes to close us out before I thank you all.
Okay, well, thank you very much, Andrew, and everyone for all your questions and comments. I learned something. I think the point I would like to make about China is that Deng Xiaoping, who started the whole ball rolling back in 1980, two things he's interested in: stability and raising living standards. And that's what China's about. And the idea that China has a secret strategy to replace the United States as the sole superpower is, I think, the invention of people at places like the Heritage Foundation and the Hudson Institute in New York. And I just don't believe it's true. I don't think the Chinese really think that at all. They're trying to do the best they can with their enormous and very interesting and historic country. And I think that should be allowed. And I think the Chinese should be permitted to improve their living standards. We shouldn't forget the huge benefits that China's emergence has already brought to the world, both in terms of pricing of everyday products, which has allowed poor people to live better, investment in many places. I was reading the other day about the new railway line, for example, from Nairobi to Kinshasa, financed with Chinese money, and so on and so forth. So they have brought a lot of benefits. And my parting comment would be, let us accommodate China into the world. Let us try to work with China. Let us talk to them. Let us put our concerns to them in a very forthright way. And I think we'll find that the Chinese welcome that and respond positively.
Thank you. Thanks, Giles. Whether it was because I was watching Prime Minister's Question Time earlier today or not, the creative but chaotic method of democratic government in the West, I can see does not appeal to members of the Chinese Communist Party. So when people ask if they wouldn't like to be part of a Western democratic liberal environment, many Chinese people, I suppose, can be forgiven for saying, no, thank you very much. But nevertheless, how China behaves in foreign affairs and with its neighbors is something we need to consider. And I think that does pose a danger. I think the comments that we've heard today and the questions have all heightened the importance of doing business with China, being conscious of the opportunities of the future. And we're just lucky to have this forum to be able to discuss this in this way, which I don't think would have been permitted in either Taipei or in Hong Kong. So to both of you, Giles and Andrew, to Alex and Andrew, who does the systems and digital for us, Andrew Brotherston, and to Rick Mincham, who's been listening. Thank you very much. And as they say, until the next time.